Hello everyone. This next clip provides you with an overview of some of the strategic highlights achieved by Transaction Capital during the 2020 financial year. Transaction Capital's resilient and agile response to COVID-19 enabled significant strategic progress this year. Firstly, our business models have gained in relevance in a post-COVID-19 environment. In SA Taxi, we saw that the minibus taxi industry is an essential service as it operated during national lockdown while most other modes of public transport were closed and still remain inoperable. In TCRS, COVID-19 has increased indebtedness and impaired the consumer's ability to repay its debts, creating larger NPL portfolios than ever before. And in We Buy Cars, as disposable income is under strain and new vehicle prices continue to increase, consumers opt to buy a used car instead of a new car. For these reasons, activity in our operations in many instances is nearing pre-lockdown levels. This too has placed TC well to build on its long-term track record of growth for 2021 and beyond. Next, the resilience of our capital strategy was tested and proven during 2020. During the year, we bolstered our equity base by about 900 million rand. 560 million rand of new equity was issued via an accelerated book build in June 2020, and a further 329 million rand of new equity was issued to part fund the investment into We Buy Cars. We've maintained robust access to liquidity to fund organic growth and enjoyed very strong support from the debt capital markets, with about R1 billion worth of approved and undrawn facilities at a holding company level for strategic growth opportunities, and undrawn facilities at divisional level covering funding requirements well into 2022 for loan origination at SA Taxi and for the acquisition of NPL portfolios at TCRS. This strong capital position enabled Transaction Capital to invest into We Buy Cars, using our excess capital held prior to lockdown, the new equity raised, and our debt facilities arranged at holding company level. Undoubtedly, the most significant strategic initiative or highlight this year has been Transaction Capital's transformational investment into We Buy Cars, at a time when most businesses in the world were completely inwardly focused. The main point that I hope to leave you with this morning is that TC's opportunity to invest into We Buy Cars is truly an extraordinary opportunity. The investment is immediately value and earnings accretive, converting interest income on undeployed capital into operational earnings, expanding our earnings base by creating TC's third adjacent market vertical, and positioning TC for growth in years to come. We Buy Cars is an exceptional business with a high quality and predictable earnings track record proven over about 2 decades, high cash conversion rates, and robust organic growth prospects. It's an entrepreneurial, founder-led business with the founders still actively involved and materially invested. It's uniquely positioned in South Africa's large and resilient used vehicle market, with favorable structural market conditions, and options are available for TC to increase its stake to about 74.9%. Other highlights include TC Global Finance, where the strategy to invest into international distressed debt and specialized credit markets remains valid and will be pursued. We've invested about 8.7 million euros to date and will maintain our conservative and selective approach. We further enhanced our ESG framework. We augmented the skills and independence of our board with the inclusion of Ian Kirk, Suresh Khanna, and Sharon Wapnick as independent non-executive directors. And more recently, we've introduced a strategic long-term shareholder in Royal Bafokeng, who acquired about 1.8% or 12 million shares in the market. There's potential for Royal Bafokeng to increase their shareholding to 3.7% as TC plans to obtain specific authority to issue another 12.4 million shares in the new year. SA Taxi's strategic highlights include its resilient and agile performance, with pre-provision profit increasing 11% and its cost-to-income ratio improving from 43.2% to 44.2%, driven by positive operational leverage. SA Taxi remains conservatively capitalized, with a capital adequacy ratio of 20.9% and provision coverage increased to 6.7% from 4.8%, protecting its balance sheet. Liquidity is not an issue, with undrawn facilities in place to cover funding requirements for loan originations into the 2022 year. From the graph at the bottom of the slide, you can see that collections have recovered to about 85% of pre-COVID levels by September 2020, with collections expected to normalise by January 2021. SA Taxi delivered about 400 million rands worth of value to the minibus taxi industry in the form of formal payment relief to clients, and about another 9 million rand towards health and safety in the form of commuter and industry contributions. This all positions SA Taxi well to resume its long-term track record of double-figure percentage earnings growth, using 2019 as the base. TCRS's strategic highlights includes its resilient and agile performance, with pre-provision profit up 12%. Collection services in South Africa and Australia proved resilient, with 2020 collection revenue up 14%. We experienced very strong performance from Recoveries Corporation in Australia, with earnings growth in line with pre-COVID-19 expectations. The realignment of TCRS has progressed very well, with the establishment of Transaction Capital Transactional Services, creating a single-scaled transactional services platform including TC Payment Services, First and Access. In addition, the wind down of TCBS is substantially complete. Again, from the graph at the bottom of the slide, you can see that collections on our NPL portfolios performed at an average of about 85%, well above our expectations that we set at the half year. However, future collections are anticipated to recover more slowly and over a longer time period to only about 96%, resulting in the COVID-19 adjustment to the carrying value of our purchase book debts increasing by 270% to 588 million rand. This conservative approach protects our balance sheet and ensures future yields align with past performance. In conclusion, our business model has gained in relevance as COVID-19 increases indebtedness and impairs consumers' ability to service their debt, creating larger NPL portfolios to manage or to acquire. This phenomena has now been termed a debt cliff in the international markets. TCRS is well positioned to win new mandates and acquire NPL portfolios due to its capital position and highly effective work-from-home capabilities, positioning it well to resume its long-term track record of double-figure percentage earnings growth, also using 2019 as a base. Thank you everyone. Until I see you again, stay safe, stay healthy and stay productive.